Hello. Hello. Hello, morning.
Good morning. How are you?
I'm good. I'm good. Thank you for making the time on a cold Sunday morning.
You're very welcome.
Yeah. So I'm just gonna read out your bio because this is the first time we're interviewing you for the sake of both our clients, followers, subscribers, and then we can just dive right into the questions. All right. Let me fetch it from my phone. I think you had sent me some days back.
Yep.
All right. Okay. I got it. Maurice Gitau is the proprietor and operator of the Afroswingfx brand name. Maurice was engaged in Forex trading with little success due to lack of knowledge and inexperience. You can read his full story at his website, Forex Trading Journey, a Kenyan Odyssey. Presently, he is engaged as a Forex trainer, a signal provider, and a strategy provider for clients interested in growing their wealth. He identifies as a swing trader, using smart money concepts in his craft as a Forex trader. Conservative and long-term thinking are his key pillars across the services he provides. In addition to copy trading services, he also offers Forex training and Forex trading signals. And because our theme is Forex copy trading services by Afroswing, I'm going to read out his definition of Forex copy trading. That's going to be our theme for today. Forex copy trading offers investment opportunities to prospective Forex investors who may have had the skill or time to trade financial markets. Trading successfully over time allows experienced traders to build a profile. Their trading profile is published for viewing and interrogation before investors adopt the selected strategy. So welcome, Maurice, to our trading lounge. And
Thank you, Sylvia, for having me.
It's really an honor to have you. And you can maybe just for the sake of explaining to us just more about your trading history, the year you started trading, you can tell us just by a small definition when you started trading officially to the point where now clients started seeking you out as a strategy provider, being onboarded by licensed firms such as HFM Kenya to be a strategy provider. Of course, you've given your trading history, it's in the open and people have the confidence to follow your trade. So just that brief.
Okay, thank you, Sylvia, for having me. I started trading in 2014. And from 2014 onwards to 2020, I lost a lot of money. I cannot say I traded successfully. But from 2020, the end, starting 2021, I have been trading consistently with my profile being public. And in 2022 was the first time I was listed as a strategy provider by HF Markets, now HF Kenya. And I have been growing my profile with HFM. I have also been listed by Windsor Brokers and also FXTM just this year, 2024. I have seen a lot of growth where presently we have around $21,000 assets under management. For me, I think copy trading has been one of the best innovative products that allows people to grow their wealth. It's an alternative investment scheme. So from 2014 to 2020, loss making and a lot of learning. Then from 2020 onwards, I can say it has been consistent with also new forms of learning. Thank you, sir.
All right, good. Thank you for that introduction. So, and also it's quite impressive that your assets under management have grown significantly. So $21,000 is over 2 million Kenya shillings just for people who will be listening in from Kenya. So at least you're ready and you're growing that with, of course, with as more time goes by, because even when we collaborated with you, we've already signed up a few clients and more to come with under HF Markets. And this is not like a sponsorship. They haven't sponsored us to do this webinar. It's just the truth as it is, and people can actually verify Afroswing as a strategy manager under HFM, Windsor, and now Xfinity. Maybe you can tell us from your experience with different brokerage firms, for people who are interested in copy trading, what are like the key metrics they should look out for when they are following a strategy provider? Because you find that some strategy providers, in as much as like for yourself, you also had some challenges from 2014 to 2020, as you mentioned. You might find that some strategy providers are not profitable long-term, like their strategy is not profitable long-term, but they're already listed. But there's that like checklist that the broker also gives you, like for example, I can just quote like a risk score, for example, or the price to earnings ratio, that people can just use as a metric to vet the profitable strategy providers like yourself. So like, what should people look out for?
So I've seen investors who strictly look at return, but my advice would be the best parameter to check out would be risk, not the return, risk. Because you want a provider who will ensure you are here 5, 10 years, 20 years into the future, not a provider who makes you 10 times today and you lose it tomorrow. So risk would be the best indicator. And why do I say risk? You're looking for somebody who is very conservative. A conservative person will work on protecting your capital first, not just making new money, but protecting your capital. So there are different ways that risk is evaluated. So for HFM, they will do a score of 1 to 5. For other brokers, they'll simply indicate your drawdown. So for me, those two parameters, the drawdown or the risk score, depending on what the broker prefers, would be the best criteria for you to choose before investing.
All right. And maybe now this question ties in with your brand name, Afroswing. You're a swing trader. And
Yes, I am.
I Googled here, not I Googled, I checked out your strategy again for under HF copy strategy providers. And your risk score is actually very good. It's between 1 and 2. So over those years that you've been a strategy provider, you're beating the average, which is at 3, like you mentioned. So maybe you can tell us what does swing trading mean for the new beginning traders, and also when you started out trading, like for example, for yourself, what would you say is your trading philosophy that you stand by, that makes you be able to give outstanding and stellar performance over the years, not even on a month-on-month basis, because you might find maybe in January you had a down month, but in February and March you recovered and superseded. The monthly returns are not like constant because the equity curve keeps on, it can shoot all the way up and then drop in a couple of months. So like, what is your trading philosophy based on your trading personality, which is a swing trader?
It's interesting that as you age, is when you realize that I think good things take time. For me, the philosophy I operate with is that good things take time, and that I'd rather be slow but very sure instead of moving very fast. Because 10 years ago, 2014, when I started, the word patience did not feature in my trading vocabulary. It never featured. It's now. But right now, I am able to sit back and wait for the market to come to me. One thing I have learned is that the market will always deliver price at the point you're expecting. Maybe not now, maybe not tomorrow, but eventually price will come to that point. And it got me asked, I started asking myself a lot of questions. If price will eventually get to that point, what's the point of chasing it? Why don't I get into a trade? Now, why am I a swing trader? Why don't I get into a trade? Let the price ride out like a wave. It will eventually deposit me at the shore of my target price or my target take profit. So I'm a swing trader because the markets have taught me, be patient. Just be very, very patient. Don't worry. Eventually, the market will give me the profits I am looking for if I am patient. That's why I've become a swing trader who will hold trades for weeks and even months.
And then I also saw in your trading strategy, the way you've listed it, you also use order flow.
Yes.
In your trading strategy, which is primarily based on price action trading. So
Yes.
maybe you can also tell people what institutional order flow means, especially for the technical analysts.
So I interact with order flow in an interesting way. So in 2020, when I was now losing my last capital, and in 2020 I lost more than 20,000 USD, I kept seeing people draw some rectangles on their charts that price is going to come back to this place, and then price will react, it will do X, it will do Y. I never liked those people who kept drawing those things because they're always drawing them in the opposite direction of my trade, number one. So that's why I never liked them. But eventually, price used to do what they were predicting. So I told myself, what's the point of hating these guys? Why don't I just learn this thing called order blocks that they are drawing here? Let me see what will happen. So with order blocks and supply and demand, you get to learn that the market must always be at equilibrium. And you learn this from basic economics, that supply must equal demand. If you have an excessive supply, that price has collapsed, eventually buyers must be allowed to come into the market, which is now demand, for them to push price up to a certain point. If we have excessive buyers, price has shot up, we must allow sellers, the market must allow sellers to come in much later to equalize the price. So with order blocks, you learn where institutions are likely to place their orders for them to drive the markets, because institutions are the biggest drivers of these markets. We retail traders, we are small fish. So instead of going against them, why don't I sort of try to mimic their moves so that I can profit with them in the long term? And if you start thinking like institutions, you realize the market will always be here 10 to 20 years into the future. What's the point of being in a hurry? And interestingly, in 2010, 2014, the value of the entire Forex market was around 3.5 trillion. Right now, we are hitting 7.5 trillion. So it has expanded in 10 years. So what's the point of rushing? Instead of just waiting, the market will expand. It will give you additional opportunities. So for me, that's how I approach the market with order blocks.
Okay, so that's good. And then also, for the sake of understanding more about your trading strategy, I'll give you access to share screen, and then at some point we will be able to evaluate some of your most recent trades, so that guys can actually understand more instead of they can be able to see practically what we're talking about.
Yeah.
But just to add on what you're saying, like order flow concepts, I hear what you're saying is that you now follow the money, like you follow the institutions, because like we retail traders are just like a tiny bit, a fraction of the entire market. I'm not sure about the valuation though of the 3.5 trillion you said it was in 20?
Between 2010 and 2014.
Like the total, because I usually average like 6 trillion thereabout. But anyway, if it's grown to 7.5 trillion in 2024, that's good. So like also, did you trade through this recent US election period, and do major geopolitics and fundamental macro-driven events affect your trading, or your trading is purely on price action trading as a swing trader, meaning that you hold your positions longer, maybe for days, sometimes even for months? You haven't reached to a point of a position trader where you can even hold on for quarters, but you're a long-term, like from your trading buyer, you're a long-term oriented trader. And some question I've always been receiving from people who follow you through STL is, I see Afroswing, they don't know you like your name, but I see Afroswing always has open trades, so many, he trades very many different currency pairs. I tell them, yes, it's good because he's diversifying your portfolio. If he trades many currency pairs, it means that he's flexible. He's not just trading maybe Euro USD. And the reason he has open trades is because he's making some money for you. So you just need to be a little bit patient and be able, if you really have any doubts, just do like the ratio for the risk to add ratio, the positive close trades divided by negative close trades, and you'll see he averages 1 to 2, risk 1 to 3. So he's doing it professionally. So maybe you can touch on that before we go to the practical illustration. Yeah.
Okay. So do I trade during news? I'm strictly a price action guy. Okay. And I've learned that news will either drive the market towards your limit orders if you have a limit order, or the news will drive the markets towards your take profit. So you'll find that during maybe NFP, elections, or CPI, And the market will simply either give me a new trade, a new limit order I've put in the market will be activated, or an old trade that maybe was open 3 weeks ago, that trade will be closed because of the news. So news for me only drives price in either limit orders or take profit, but I don't really trade the news for me.
Ah, okay. So you're just a pure technical analyst and you follow the price. And that's actually good because you already know your strategy, you know what works for you, and you keep doing what works for you. However, like during the US election, there was a lot of market volatility. I experienced even in my own personal trading. People were able to cash out really good
Yes.
during that time. If you know what you're doing and if your strategy is solid and you have a good risk to reward ratio.
Yeah.
All right, that's good
Yes.
to hear. And then, so like as a manual trader, which asset classes do you normally focus on? Do you have like a favorite currency pair? And if you do, which one is it?
Okay. So I'll also make reference to the previous question why I have very many trades. So they seem like very many, but in reality, I only open one trade per instrument, only one trade per instrument.
Okay.
And I trade very many instruments, and I strictly focus on currency, not metals and not indices, just currency. And the reason I focus on currencies is because I think they are more stable if you compare them to metals and indices. And I'd rather focus on something that works on protecting my capital. So having very many trades open or very many instruments that are trading, you will find that rarely will they move in the same direction, all of them. Some will move in the positive, some will move in the negative. And some will close this week, and then others will close maybe next month, and then new trades will come in. So it simply allows trades to keep coming through the pipeline that allows me to meet my threshold that I have promised the investors we can make every year. So that's the reason why I sort of diversify across very many currencies. My favorite currencies are the commodity dollars, the Australian dollar, and New Zealand dollar. Whatever it's trading against, except JPY, those are my favorite pairs. It could be NZD Canadian, it could be NZD CHF, it could be Euro NZD. As long as it has a commodity dollar within it, I really love that trade. They sort of don't have a lot of volatility, so it sort of protects you. I think even for new traders, they can start with commodity dollars. They are not that volatile. They move slowly, but they'll still give you good money.
Yeah, especially the AUD USD, like you said, because Australia has a lot of gold and it kind of like mirrors XAU USD. They kind of like move in tandem. So I think also commodity pairs, like you said, really can be able to give someone good returns. But I also advise people when they're starting out, they should like focus on the majors, like the combination of the majors, not the exotic pairs, but like what you're saying, for example. Also, maybe just to add on, like you said, capital, you work on protecting your capital size. So given that you already have an asset under management value of over $21,000, someone with $500 can still follow you. Someone with $10,000 can still follow you. So maybe explain to us the difference in terms of the return, what the $500 would expect to make, and what the $10,000 client would expect to make when they follow you. Because I think that Forex trading is very capital intensive. And I tell people, if you don't have money to trade, just save even for 2 years before you start trading, because then you will have a good margin to trade with, and you will use the recommended risk score of risk reward ratio of 1:2, 1:3, because then at least you'll have, even if you have access to leverage, which many brokers give between 1 to 400, 1 to 500, you still need, like, if you want to do this professionally and full-time, not like as a side hustle, like this is your day job, it's paying your bills, it's paying your school fee for your children, you have to have like the capital bandwidth. And I tell people, if you don't have like 1 million bob in Kenya shillings, that's about, give or take, I don't know what the dollar exchange rate today is, but if you don't have like 1 million bob, don't start as a part-time trader. And then save your way up and grow your capital by reinvesting the profits that you're making into your trading account, not always taking away from your trading account. So maybe you can touch on that. Yeah.
So the minimum is 500, but you can put as much as you want. And I work on giving investors a standard rate. Whether it's 5 or 10 or say 20 million, the rate would be 20% per annum. Why do I work with 20% per annum? I like using $500 like a trading speed governor. So the smaller the account, the more conservative I am. Even if you deposited $1 million, my mind will still work with $500. So you'll realize I am not swayed by the amount of money people have invested because my mind strictly focuses on the $500, which is the smallest account that I am able to accept. Why do I focus on $500? I think, Sylvia, you'll see very many strategy providers fail, and they don't fail because maybe they don't know how to trade. They fail because they think of money they'll make fast. When I think of myself fast, I am likely to be extremely aggressive. So the guy with 500 or the guy with 10,000, I'll be so aggressive that both of them will lose. But if I use my $500 as my trading speed governor, even if you did 100 million USD, you will still move at the pace the $500 person is moving, and you're going to protect your capital. Remember, I want to be here 10, 20 years into the future. And the only way you'll guarantee consistency and growth over the long term is if you move step by step, one day at a time. No hurry, no rush. Like I said, good things take time. So whether you've done 10,000, whether you've done 30,000 USD, whether you've done $1 million USD with me, the rate will be 20%. And 20% is on the conservative side. But I've seen guys who sort of come and copy and they hit more than 20%. But for me, I just work with 20%. I think that's a very fair return per annum, unless you want us to engage in excessive risk. Again, I don't want to do excessive risk, just want to do conservative risk. We'll make you 20 plus, and life will be okay.
Yeah. And then also there's also another aspect that people need to consider when they're following you. So that's the performance and management fee. Because copy trading, in a nutshell, what copy trading is delegating trading to a professional like yourself, Maurice, to trade on your behalf, but this strategy provider is allowed to do so legally because the Capital Markets Authority law does not allow you to directly take deposits. However, if you provide your trading history to a broker, say now like HFM or Windsor or Xfinity, like you said, you were onboarded this year by Xfinity, your trading history is required. They can be able to see your trading performance and check everything. It's in the open. It's vetted by the broker, and you can be able to know which strategy provider is making money and which one is making losses. So maybe you can touch a little bit on what can I say, the equity curve bit of things, because that for me is like one of the strength criteria for people. Like, since you were onboarded on this trading platform, how has your performance been to date? And people should know that the day that you are onboarded on the platform is not the day that you started trading. For example, if you are onboarded by Xfinity in 2024, doesn't mean that you started trading in 2024. It just means that you are listed as a strategy provider allowed by the Kenyan government to do fund management for people in exchange for a fee. And this fee varies from different strategy providers to different strategy providers. So what is your performance fee or management fee? I think also it compares to what we have with local banks. They also have their treasury department. They also do Forex trading in-house. Like I know Mansa X, which is a branch for Forex trading for Standard Investment Bank, also does Forex trading for their clients. And they give that kind of return of, the first year they did it, they were averaging between 20 to 24% per annum, which is also what you're saying. It's close to what you, give or take, what you're doing per year. So just that confidence level for people to know that how much is your how much do you charge as a performance fee? Because people will follow you because they don't either have time to go to the broker classes. Maybe they are 9 to 5 employed people with a lot of time, a lot of money, but no time to learn how to trade. But they want Maurice to do the trading on their behalf. So how much do you charge for your skill? Because this is a skill that you have invested over the years, and you have to charge for it.
Yeah. So the highest fee I have charged is 50%. That's the highest fee that I'm currently charging for HFM investors. For other platforms, I'm doing 45%, which is more or less within the range of 50%. And investors usually ask, why 50%? 50% is too high. Why don't you do 20? Why don't you do 30? It's like some sort of handling. My response is, unlike other strategy providers, I have a dual role. My first role, number one, is to protect your capital. It's not even to make you money. My first role is to protect your capital. I need to have that mentality every day I go into the market. Then the second role is now to make you money. I don't even mind after 1 year we've only made 2%, but you can access your capital. As opposed to making you 30% within the first month, and then after 1 year you realize you lost your entire. So when other strategy providers are coming to the market, majority of the times they're focusing on the return. But I'm focusing those two dual responsibilities, protection of capital and return in the end. So I have like an extra job. That's why I am charging a premium. But I also ask guys, if money was no object and you had a health issue, where would you go to get medical attention? Would you go to a local facility or you'll go to an established facility? And oftentimes people tell you, I'll go to an established facility because there's that sort of security that I know what they tell me they can handle, they will handle, and I'm sure I'll get the best service. So if that is the attention we can give to our health, why do we give lesser attention to our money? And at that point is when now people realize, okay, fine, then maybe I need to look at it in a different way. So that's the way I charge. So the issue with my equity curve, I tell myself I like compounding. And I did a video of compounding and I said, if you earn 20% consistently, it will take you about 3.6 to 4 years to double your account from X to 2X. And if you keep earning 20% consistently, you'll take another 3.6 to move from 2X to 4X. And I like doing it using myself as an example. So if you look at my equity curve with HFM, you'll realize I've not even withdrawn even $1 from 2022 because I want to use it as an example that you can actually do it. If I am doing it, you can do it. So don't be in a hurry. Let's make money. Let me withdraw. Let me enjoy. You can actually be patient and you will see long term. That's how I look at the markets.
I've actually watched your stellar performance to date because the first 2022, you were all on the green zone. 2023, even 2024, maybe your first drawdown month was in September of 2024, which is expected because as traders, you have combination of both winning and losing trades. And so like when they see like a dip kidogo on the red zone, they shouldn't be worried, oh my God, Afroswing is gonna lose my money, because when you do the average return per year, you can see he's still net profitable. And that importance of compounding for me is really key because every time you take out your profits, you cease to reinvest in your portfolio as a trader, or your whatever amount of money that you have. So I think for now, you can prepare us for a practical session in a few. Maybe you can tell us the trades that you have traded in November, because now we're in December actually. Which currency pair like you traded. Maybe you can give us like the best performing trade and the worst performing trade. And then we can analyze based on your swing trading approach, what people can learn just from your own trading. So let me give you access to share screen. Actually, I think because this meeting is gonna end in 4 minutes, let's just roll over to the next link and then we can actually do that. A live practical example, because I think the first session of this copy trading class is for people to understand, and they have understood now what copy trading entails, and also a little bit background of your trading strategy. And before we actually go to the practical session, you can tell us, do you actually offer Forex training, and how can people get in touch with your company? I know you have a website. If they wish to follow you, what are your social media handles, so that we don't go back to that question towards the end? Because I want you to have ample time to explain to us your trading rationale, why maybe this was your best trading trade in November, this is maybe your worst trading trade in, maybe even take a losing trade in September of 2024. And if people wish to learn how to do this, we can always follow up with them in the later classes. Yeah, so you can tell them how to get in touch with you.
So social media, you'll get me on LinkedIn, you'll get me on Twitter, you'll get me on, I'm rarely on TikTok, but I'm also on Instagram. And the handle is AfroSwingFx, even on YouTube, AfroSwingFx. That's the only handle I use across. Be it on YouTube, be it on Twitter, be it on LinkedIn. If you just search AfroSwingFx, you will find my content. It's a green, it's an emerald background with a gold logo. That's how you know it's my brand. That's the only way you know it's my brand. So guys who want to learn, I only train people on request. You will rarely see me market my classes. I only train people on request because I want to give you personalized attention, and my training will usually take you 20 to 25 weeks. So I don't want to take a big group. I just will take a smaller group, or even one person at a time. I give you my personalized attention for the next 20 weeks to help you understand how I see the market, for you to see the market the same way. So for me, I don't look at training people as a commercial venture that I need to focus on numbers. I look at it as a quality venture. I just want to focus on, even if it's 2 people in a year or 3 people in a year, but they can actually tell you, by the way, this thing is now making sense.
And how
So
much
that
do you
makes me
charge
feel
for that? Because that's like almost 6 months into training someone personalized.
Yes, it's 5 to 6 months. So I charge $500 or 65,000 Kenya shillings, depending on which one you prefer. So it is enough to take us from week 1 to week 20, and you'll understand why it's costing you that much and why it's taking you this long.
Okay, solid. All right. So let's just I'll share the screen. I think you should be able to share your screen, and then you can take us through like the trade setups. Yeah.
Okay. So let me just log in onto the next link and then we start it.
Yes, just shortly. Let me end this.
Okay.
You can more?
Yes.
Good.
Saying recording in progress. So I share my screen.
All right. Yeah, you can share your screen and take us through the practical example.
Okay.
All right.
Just give me a minute. Let me share fresh.
No worries.
You see, this will be my sort of, I think, first time using Zoom. Just a minute. Good. I think now you'll be able to see my. Are you able to see my trading view? Are you able to see my trading view?
Yeah, I can see your trading view. Yeah, sure thing.
Good. So just for...
I can actually see the logo that you mentioned and your company brand name, AfroSwingFx, Maurice Gitau, Trading View Premium. Yeah.
So on Trading View is where I publish my work. And just before we go into the charts, for me to share with you how I look at the market, I have come to learn that the market is always telling you a story, and price is the language of this story. So you must learn the language for you to understand the story. So before we go into the chart, that's the background. And if the market is always telling you a story, I like going to the beginning of the story, which is now the monthly time frame. I will start with the worst trade that I had. The worst trade that I had in 2024, which was on New Zealand JPY short trade. New Zealand JPY short trade, and why was it the worst trade I had this year? I hope, Sylvia, you can get me.
Yeah, I can hear you loud and clear.
Okay. I thought I'm the one who muted you.
No, I had muted because I have someone else in the house who's asking me questions, and I don't want their voice to be in the video.
Okay. So let me just let the trading view connect. So my screen, I think, is now visible. I want to go to the worst trade, which was New Zealand JPY trade. And I'll also share why it was the worst trade that I had. So,
all right.
So currently I'm monitoring New Zealand JPY. I want to buy it. But let me just go to the, so if I go to the monthly time frame, so let me start with the mentality of how I look at the markets. So I start on the monthly time frame because I want to go to the beginning of history, the beginning of this story. Remember I said the market is always telling you a story? Yeah. So I want to go to the beginning of this story. Let me see how this story started. And I usually develop a bias on the monthly chart, and I see this currency is bullish, this currency is bearish, this currency has left a lot of imbalance in this region or that region. So it helps me understand that moving forward, I think this currency will move in this direction because of that imbalance. So I had seen this was a short trade. This was a bearish momentum on the monthly chart. And I was very eager to take this trade. It's the beauty is you keep learning every other time. And I had gone from the monthly, the weekly, and the daily, and then I went to the 4-hour. And one thing you'll realize, and if you study my copy trading profiles, is that the latest profile of FXTM or Xinity, in 2 years' time, it will be doing much better than what I have on Windsor. And Windsor in 2 years' time will be doing much better than what I have on HFM. It's a sign of growth and evolution as a trader. You must always be doing better.
And why is that so? Like, why is it varying depending on the brokerage firm?
So the trader that I was in 2022 is not the trader that I am in 2024. You must be always improving as a trader.
100%.
Yes, you must. So that's why in 2 years' time, you'll see the Windsor will be different from HFM, but FXTM will be even much better than Windsor. So if I open another one today, the chances are they'll be competing with the FXTM. So back then, I think, early in the year, I was executing trades on the 4-hour time frame. The problem with the 4-hour time frame is that you have so much noise compared with the daily time frame. The daily time frame has lesser noise. And the daily time frame, you need to be extra patient to wait for breakout structures to happen. On the 4-hour, they happen very fast. So the New Zealand JPY trade that I took, and I think if you check, I think even on the Windsor statements, you'll see there's one trade that says -$1. That is the New Zealand JPY trade that I lost. And why did I lose? I was very eager to sell. But if you study JPY this year and last year, it has been doing crazy things. And those crazy things, they were actually predictable in the market. By the way, if I'm being very honest, again, the market is telling you a story. The question is, are you listening?
Yes.
So it was telling me a story, but I was like, nah, your story is fine, but I think this is what will happen. And I'm sure you've seen this with new traders, novice traders, amateur traders. You're telling them, let's do this. Like, no, let's do this. But after a while, they tell you are right. So the market was telling me, yes, we will sell, but not at this level. We will sell at a different level. So I remember shorting the market when New Zealand JPY was around $88, around $88. But you remember it shot back to around 98. So my problem was the trade was within my risk margin, but the swaps were dangerously high. So even if the trade later on came back to closing a profit of $20, my swaps were already $22, negative $22. So if you take away negative 22 out of 20, you'll find that you've already lost $2 because of swap. So that was the reason why that was my worst trade this year. I also had another similar trade with AUD JPY. I did the same thing. I went short. The markets went higher. They are within my risk parameters, but the swaps again were excessively high. And I think there's an article I published, I think on LinkedIn or on my website, talking about comparing brokers' copy trading platforms. And I was talking about the cost of trading. I talked about swaps. So swaps were the reason why I lost that trade. Sylvia, are you still with us? Sylvia?
Hi.
Are you still with us?
I'm around. Sorry. Yeah, I'm around.
Okay. So one of the best trades, and
sorry, I had gone to open the door for someone.
Okay. So the worst trade was a New Zealand JPY, but the best trade in November was then a New Zealand USD. Remember I said commodity dollars work for me? So New Zealand USD, I start on the monthly again, and my job on the monthly, I don't know whether you can see notes, a lot of notes on my screen.
This is like your journal for every
so for me,
instrument.
Yes, this is like my journal. every instrument. I must do notes so that when I log in next time, so where were we? Where are we?
Yeah.
So you start on the monthly time frame,
Yeah.
you sort of develop that story. Then I go to the weekly where you'll see now the breakup structures, they are more prominent. They're very prominent on the weekly time frame, but still that is not sufficient for me. I have now to go down to the daily time frame now to refine my analysis. But you see, there's an area I have marked yellow called unmitigated. I don't know whether it's visible from your end. The unmitigated area in, I think, is it gold or yellow? And
Yeah.
then there's
It
another
is.
green,
It's yellow.
Yes, yes, yes. So for me, that is an area of imbalance that price must come back and correct. Remember, you asked me about order flow, and I said markets must always be in equilibrium. And I said when buyers come in aggressively and shoot up the price, the way you see a lot of black candles, those sellers were not allowed to come into the market. So now sellers are being allowed to come into the market gradually. That's why you're seeing NZD USD is just going down, down, down. It's in reaction to what buyers did some years back, around 2022, 2023. So I've seen the area in yellow is called unmitigated. So price must come back to that area. So once I have an idea where price is headed, my job now is to go to the daily time frame. The daily time frame now, I'm sure you can see now I have some arrows, one in red, one in green. Then I have an area I have marked as weak low. This is a weak low that in my assessment, this low is going to be broken anytime from now. In fact, my suspicion is that NFP this week, this coming week might be the reason this area will be broken. Remember, you asked me about news. So I have no idea what will happen this week, whether NFP will be good, whether NFP will be bad, but something tells me this area is going to be broken. And one thing I've come to realize that the price today is simply giving you an indication of what is likely to happen in the future, even in terms of world events. Because when you see this weak low and that area I've called unmitigated are waiting for price to come down. So chances are something will happen to the dollar in the next 1 or 2 weeks. I have no idea what. It could be a world event, it could be an economic news, but something is coming. So once this low is broken, my job now is to wait for price to give me a clear entry. Do we buy right now? We do the retracement, or do we wait for the retracement, then we wait to sell to continue? So the areas I have marked in black, something called, are you able to see something called a profit target on my screen?
Yeah.
So
I can see your take profit.
Yes. So that is my future take profit. In the event we are buying, I already know where I'm exiting today. I already know. I'm just waiting for the buy signal. In other charts, I have a take profit on the down on the lower pricing. So in the event I am selling, I already know where I am exiting, which goes back to the question you asked me about news. So for me, news will simply deliver me to either my take profit or my limit order. So if I had a limit order that was sitting somewhere up there and NFP comes out, let's say, against the dollar, NZD will rally and activate my sell limit order, which will now come to hit the unmitigated area as my take profit. So that's my trading philosophy. And you'll realize when you start from the monthly down to the weekly, down to the daily, it takes a bit of time. And that's why I will not trade every other day. I cannot trade every other day. My job is to sit back and wait for price to come and tell me, hey, we're headed in this direction. And I think there's a buy order here. I think there's a sell order here. My job is to activate. If you trade like this, you don't have to risk a lot of capital because you're doing a lot of waiting, not chasing. Because I think majority of the traders fail because we are always chasing price. So if I go down to the 4
So
hour
you
and
sit
1
on
hour,
your hands?
yeah, I do sit on my
Yeah, you
hands.
sit on your hands.
Yes.
And before you click that cursor for buy or sell, like you have, the trend has already confirmed your trading philosophy, which is what you've explained here.
Yes. Yes.
Using this successful New Zealand dollar versus the US dollar.
Yes.
I call it the Kiwi.
Yeah, the Kiwi.
Yeah. Okay, that's a good. Maybe you can take us through another profitable, our most recent profitable currency pair.
Can I show you something that I like I said, I like recording on TradingView a lot of trades that I am working on. And
Yeah.
there are very many trades I recorded on my profile. I will start with the I hope you can see the yen versus dollar trade with caution. That's an article I just published on trading. Are you able to see it? Good. So
Yeah.
this was way before the election. Way before I think the election. I'm just waiting for the screen to load. And
So as we wait for it to load,
yes.
I also like the yen and dollar because the Japan economy actually is one of the strongest. Japan is one of the strongest financial hubs in the Asian market. And you tend to find that when there is a lot of financial major things that happen, especially in the first world countries. I consider Japan to be a first world country. It trickles down to other economies. And so like the yen dollar is actually considered as also a safe haven for beginning traders to start practicing and trading with. So yeah, I think for now it's already loaded.
Yeah, it's interesting you said safe haven because in September when I was writing this article, I was saying the dollar will rally versus the yen. This was in around September. And if TradingView has this feature that allows you to replay price from then to now, you get to see what has been happening. And I will click the load new bars. You'll see what has been happening between now, okay, between September 12th to date. As you can see, the loaded bars, they're moving in the direction of my arrows. I don't know whether you've seen the bars already replayed.
Yes.
So
yes.
again, it's part of the reason why I say you start on the monthly, you go to the weekly, you go to the daily, then you develop a bias. Hey, something is going to happen. So by the time price was hitting this low, it was leaving a lot of imbalance, and we sort of could tell the forthcoming elections will have something significant that will drive the dollar upwards. But the trade that I really want to focus on was I have two of them. One was the Australian dollar versus the Swiss franc. That was a very good trade that I enjoyed. I really enjoyed that trade this year. It's one of my best trades. Let me just locate it. Good. So we have the AUD CHF, and I'll do the Euro AUD. So for the AUD CHF, remember I said the Australian dollar, the commodity dollars are, for me, they're sort of not that volatile, and I really, really like them. So this was a trade that I had on January 1st is when I had located the trade. Now I put my buy limits, and my job is to wait. And as you can see on my screen, I have done some notes. I have done my arrows, and you see my arrow is pointing upwards to a black line. A black line. I don't know whether it's visible from your end.
It is.
And then I've said there's liquidity on top there. Like I've pointed a lot of things. So I already know if I'm entering at this point, this is the point where I am exiting at. So if I load the bars, you'll see how the market it hit my first area of exit. It hit the liquidity. It has already hit the other area I had marked using the blue arrow. But remember, this is something I had located early in November of 2023. I want you to imagine waiting. I want you to imagine. No, this is why I think a majority of us fail. The waiting bit. Because you see it, you want to execute it instantly. Yeah, you believe it will hit profits, but I mean, why is it taking so long? Why is it taking so long? So this is one of the best trades I've had this year. Then the other best trade I had was Aussie Swiss was a good trade. Then one was the Euro Aussie. And this one required extreme patience because the take profit or the region of profit was hit like maybe last week or 2 weeks ago. That is when this green zone I have circled in red. That was my exit. And if I load the bars, you'll see how price went up, then it came down. And now if I load the additional bars, you will see that price has contacted that green region you were talking about. So this trade required extreme patience because it was almost touching take profit. And this is where you assess yourself as a trader whether you've matured. Do you believe in your trade that you will let it run the way it will run without interfering with it? So Imagine my take profit was 1.60. It came to around 1.61 something, then went back up again, then eventually came down. So the patience to withstand all those swings with the belief that I am actually my trading system based on the monthly, weekly, and daily time frame, my trading system is solid. Remember, I said the market is always telling you a story, price is the language. So if it has been telling me this story all along, why is there any reason for me not to believe it? I see no reason, so I will stick with this. I will stick with this story. So, in summary, that's
like
how I
that
approach the market.
philosophy because it's a yeah, thank you for the examples. At least now people have understood your trading rationale or how you execute. And I like the fact that you're repeating that philosophy that the market tells you a story and the price is the language, because it just basically means you're operating like an institution. You're not just operating as Maurice Gitau. You're following the trend. And when the trend is telling you there is an upward trend, for example, yours is to follow and ride the trend. If the trend is telling you I'm on a downtrend, you're executing you're following the trend. If the market is in a range, then little or no action. And thank you so much for that illustration. Now, as we conclude, maybe you can tell us what would be your takeaway like from this session. I will of course give people your link for copy trading. I think I have a sub-affiliate link with HFM with yours. I'm not on Windsor, I'm not on Xfinity, but with time, I'm sure we will actually have a sit down with you, possibly early in 2024, because right now we're going into the festive period.
Yes.
For people who wish to copy your trades with different brokers, licensed, and I have to insist, licensed and regulated by the Capital Markets Authority of Kenya. So we have like 10 brokers in town. Of course, we know the different brokers in Nairobi. Some of them are good, some of them don't. But we won't go into mentioning names. But at least the brokers that you're working with are solid. They have some decades of years in operation, not just in Kenya, but globally. They have FCA regulation, SISEC regulation, ASIC regulation, and the Capital Markets Authority regulation. So what would be your trading tip or takeaway to beginning traders who wish to copy trade your swing trading approach?
So the first question, and I wish I met myself 10 years ago, if that was ever possible. I would ask myself this question, and you need to ask yourself as a trader. How long do you see yourself trading? If the answer is anything less than 10 years, then this industry is not for you. If the answer is more than 10 years, then we can go to the next question. Why am I saying 10 years? It will take you 10,000 hours to become a master at anything. 10,000 hours. So if you dedicate 6 hours a day, it will take you about 4.5 years. And very few of us have 6 hours a day consistently working on something. So you'll work maybe on 3-4 hours, it will take it slightly longer. So why am I saying 10 years? If I ask you to take 1 year to learn, you've already taken 10% of the 10 years. If your answer is 5 years and it asks you to take 1 year to learn, you've already taken 20%. You only have like 80% left. So you're likely to overtrade, rush the process. But if your answer is anything more than 10, then take it slow. Then the second bit I've learned is that knowledge is power, but the right knowledge is freedom. And this I will keep insisting that knowledge is power, but the right knowledge is freedom. Very many people will tell you they can teach you, but very few people have the actual right knowledge. Very few people. And that's why you will find every year you'll find like 1,000 people will join trading. They will go to this YouTube, they'll go to that YouTube, they'll go to that other class, they'll go to whatever other class they'll go to. But by October, out of their 1,000, maybe it's only 100 who will see it through. Because many claim to teach, but very few have the right knowledge. And the right knowledge is developed over years of experience. That's why I said 10,000 hours. If you have somebody who has less than 10,000 hours and they're trying to teach you something, chances are even they themselves have not matured in the craft or mastered the craft to the point of teaching you. So I repeat, knowledge is power, but the right knowledge is freedom. Those are my only two tips.
Yes. And also, guys, you can be able to do your own self-initiative education series for yourself. Like Maurice has said he started trading in 2014. Around the same time, I opened my first trading account. And over the years, honestly, I'm not the same trader I was back then. Of course, when you were starting out, even me, I blew my first account in a week. It was $250. And I was barely new in the job market because I had just graduated. So $250 for me was a lot of money because I was earning $400 in a month. So $250 back then was a lot of money to lose in a week, but I didn't give up. You still go back to the markets, you still refine your skill set. And to date, you can say, I can proudly say I have lived off of trading for years, and it is a career that people can actually, you can make it your business. It is a business. But the right foundation is important. For people who don't even have that $500 to pay Maurice, you can just do baby pips. You can, but for YouTube, I really advise people, don't just copy any strategy provider on YouTube, because there's a lot of marketing and hype in the Forex industry. And the game that brokers play is that they can fund someone to, like an influencer, a trader influencer. So you think this person actually knows how to trade, but in the real sense, it's a marketing budget that has been forwarded by person. So like just vetting your own, when someone says they're a trainer, ask them for their trading report, their trading history, which is what the brokers allow people to do with your case as a strategy provider. So with that, I think we will end it here. It was really nice having this session. And I look forward to actually having a sit down with you. I know we've been talking on phone for so many months, but with time, the right time will come. So thank you so much, Maurice, and let's end it here for today. We might have you again on our trading lounge. I would love to host you once again on a different topic. It doesn't have to be copy trading. But thank you for defining what that is in simple terms, and also explaining to us practically through your trading view, and even showing us your trading history. Solid, and keep trading.
I will. Thank you, Sylvia, for having me. I look forward to more interactions. Nobody knows what 2025 has in store for us, but I think we are going to have an amazing year, both in the markets, but also in terms of maybe partnerships and growth. The world is large, and I think opportunities are always out there. So I am looking forward to you inviting me again on your lounge. And I think we can even do now like a face-to-face interview one of these fine days as you continue sharing information.
We can early in Q1 of 2024. It's just a matter of sitting down with the country manager